What's up, guys? Sam calling in from yet another beautiful San Francisco evening. I just want to take a couple of minutes to run you guys through the breakout that we saw in the S&P today, along with another really good setup that I think is going to prove to be a decent pick in terms of risk reward over the next couple of days. So we're looking at the S&P here, going back towards the latter half of last year, the big rally that we had in January. Things got super pumped. And of course, then the Volmageddon incident in early Feb. We're still recovering from that, and so these trend lines are pretty solid in the sense that they've been tested on the downside once, twice, three times, and likewise on the upside, once, twice, and now three times here. You'll notice that this was tightening up in the last couple of days, and I'd highlighted last week in my video there was a decent chance that the move was going to come one way or the other, and once it did break, it was going to be an aggressive move. It wasn't just going to be a little, up on tippy toes and have a look. It was going to be a strong move, north or south. And in terms of lining that up and deciding which way it was going to go, I think the odds were favoring the upside breakout. I'll tell you why. So since we've come back down here, we had a green day, red day, green day, red day. 3 green days, big red day. Green, red, green, red, green, green, red. So we've had very little consecutive green days. There's been very little momentum building. Same again here, big red day back down, 2 green days and it's smacked again. We had a hard bounce and a nice looking hammer here off the downside last week. Big up day into Friday. And then this week it had us poised. We right at the upper side of the resistance. So when the breakout came yesterday, it was strong. It closed up by its highs. Big question was going to be, are we going to hold this 2700 level from the April high? We've closed above that and held it. So now I think we've got to be looking at the 2780 level. So let me bring in this. Let's have a look what that looks like. So this is the natural level for the S&P to move towards, probably over the next week or two. And in terms of getting a number on that, what that's worth. About a 2.5% move, so it's not out of the question that it reached that off 2 or 3 days. I wouldn't mind seeing a little bit of consolidation here. I want to see 2700 held. If we're going to come back, particularly under the 2680 level, under Monday's high, we're going to probably test the lower band again. So let's see some consolidation here and push for 2800. Jumping over to SNAP. So SNAP got absolutely demolished last week off awful earnings. They had a dismal first quarter, dismal first half to the year from a stock trading perspective, and got absolutely demolished then. Advertisers running away, revenue falling, and a very poor outlook. So RSI is down at like 20, I think. I'll put it up. Yeah, so here we are, RSI down at 25. So it's extremely oversold. It's extremely oversold. It's put in a couple of lows. It's come off them, so it's holding the 11 level pretty well. This is not a value play. It's not a growth play. It's purely a bounce play. So we're having higher highs, or rather, excuse me, higher lows over the past week. We're coming up towards the 12 level, and then we'll have this gap to fill up towards $13, $14. So if we say that, that's from earlier this year, right into where it was before earnings. The risk reward is pretty favorable. You're looking at a 20% bounce play, and in terms of the downside, 4% to the downside. So if you can control your risk, make sure that you're puking it down at the 1070, 1060 level. You don't want to be caught in any waterfall action if it's going to cascade lower and lower and just get absolutely smashed. This is a bounce play. It's oversold. It's held its bottom. We're seeing a little bit of buying. It's staying steady, particularly with the S&P rallying. And there's a decent chance we're going to see some longer term investors maybe having a go, having a play. And once it gets up towards the $12 level, we're going to see the algos jumping in. And it could start to fill this pretty quickly. So the risk reward here is pretty nice. It's looking at a 5 to 1, 20% versus 4%. So something worth keeping in mind. I myself am looking at the May 18 $12 calls. They're going for about 4 or 5 cents a contract at the minute. So in terms of a lotto play, there's decent leverage to be had if you can hold them for a 4 or 5 bagger. Keep in mind, you're going to be playing off the expiration next week, and any down moves towards the 10.50 level. And so it's tight risk management, but the options are there to get a big winner and to make it work for you. As always, leave any questions, any comments in the video section. More than happy to chat back with you guys, and we'll catch up next week.